Hi, today we are going to discuss very important topic regarding UAE corporate tax for family foundation. I will try to make you understand in easy manner. First of all, here we will discuss what is the family foundation. For your understanding, a entity used by families like a foundation, trust or similar entities. For what purpose they establish these entities? For holding property, money, investment, for supporting family member or charity, for helping plan wealth for future generation. These purpose should be there. Then that entity is called as family foundation. Further, family foundation under the corporate tax law, there is a two type of structure for family foundation in UAE corporate tax law. One is a judicial person, second is established by contract. Judicial person means legal person which subject to corporate tax in normal situation if they are following condition as specified in article 17 of the corporate tax law. It will be called as a family foundation, and if they take the approval from FTA, then it will be called as unincorporated partnership. On the other hand, if family foundation is established by the contract, then it will be considered as unincorporated partnerships because there is no any incorporation in UAE. So it will be called unincorporated partnership by default. These two type of structure you have to remember that. Why this is important, I will cover in next slide. When is the family foundation tax? If it qualify, it can apply to be treated as unincorporated partnership. You understand? If you qualify as unincorporated partnership, what the meaning of that? Meaning that foundation itself won't be taxed. This is very important to understand. If you fall as an unincorporated partnership, then the family foundation itself won't be taxed. Whatever the beneficiary may be taxed. You should remember that. Condition to be the family foundation. What condition we have to follow if you are falling under the family foundation? First, be created for family or charity. Second, only manage wealth or investment. Third, not doing any business. Fourth, not created only to avoid tax. Fifth, share charities income within 6 months. These are five conditions you have to follow. If one of condition you are not following, then whatever exemption for your family foundation will be revoked. So you understand, if you are following five conditions, then your family foundation will be not taxed as under UAE corporate tax. I hope you understand. Further, foreign family foundation can also qualify under UAE tax too. If any family foundation, for example, established in UK, and uh, they they invested in UAE property, UAE real estate, and that is maintaining by their UAE agent. So whatever income is generated by that family foundation, that will be not taxed under corporate tax law. I hope you understand. For understanding these conditions in simple manner, first of all, we will cover some scenario. You need to understand holding rented flat. If family foundation holding rented flat, there will be no tax because this is investment. It will they are following the condition. And second, running a hotel means there is one of condition is break. They are doing the business, so you have to pay corporate tax. Third, foreign trust holding UAE property. Foreign trust can be hold UAE property, and it is also covered in the condition as specified under section 17 of UAE corporate tax law. So there will be no any tax on that. Mixed ownership company. Family foundation means 100% holding by the family member, not else. So you need to remember, if there is a mixed ownership, you have to pay tax on the family foundation's income. And finally, not paying charity on the time. If charity income share not is paid within 6 months, there will be the condition break. So you have to pay corporate tax on that foundation. I hope you understand in this simple scenarios. Furthermore, this is very important. Multi-level structure. What is the multi-level structure? in the UAE Corporate Tax Law, if a family foundation owns other companies and everything is done managed by family investment, means for example, you are a family foundation, you own other companies like LLC for the purpose of managing family investment, not for the business. Those companies may also qualify for tax transparency. What is the tax transparency? No tax at entity level, means you are family foundation and you are following the condition, so you have not to pay any tax in UAE. And further, if you are holding any company in UAE for the purpose of managing family investment, that company is also not qualified to pay any UAE corporate tax law. This is double benefit. You need to remember that. But this benefit will you can take this type of benefit, but you have to follow something, follow the rule and follow and taking the approval, because you understand this is a legal person. If you are a legal person, you have to take FTA permission for becoming unincorporated partnership. So there is two things: you have to follow the rule and apply for the approval. What the rule you have to follow? First, be wholly owned and controlled by the family foundation, means whatever the family foundation need to hold 100% holding of LLC, either directly or indirectly. I will let you understand in next slide. And second, meet the condition specified in Article 17, as I discussed earlier. So two things you should remember: if there is a multi-level structure, and so you should remember that there should be 100% holding of family foundation, and the LLC have to follow the condition as specified in Article 17. This is simple way. I hope you understand. This is simple multi-tier structure as explained in FTA guide. This is very simple in example. Family foundation N, which is 100% holding is in the hand of family member, and second, they hold 100% in ALLC, and ALLC hold 100% in BLLC. Subsidiary A is called direct holding and subsidiary B is called indirect holding of family foundation N. This is simple example you need to understand. Means here is LLC subsidiary A and LLC subsidiary B. There will be no any tax in the hand of both subsidiary A and subsidiary B. And other part, family foundation is also not taxable under the UAE corporate tax law. Only family member may be taxed may be exempt, because you know that in if you are a natural person and there is an income of real estate or personal investment, that income is also exempt. There will be no any tax in the whole scenario. I hope you understand. And for your understanding, there is a other example: multi-tier structure, ownership condition not met. As FTA guidelines mentioned that there should be 100% holding by the family foundation. In the company D, there is only 80% holding by the family foundation. Means there is a one of the condition is break here. So company D have to pay tax uh, in own capacity, and family foundation C, they don't need to pay under UAE corporate tax law, because this is 100% holding by the family member. I hope you understand this type of example. Thank you for watching my video. If you like, please comment here. If you have any query regarding family foundation and structure, please let me know. I will be very glad to answer your queries. Thank you very much.